So for now, let's move on to the next one. Okay, the lesson is already posted in your um, Google Classroom. Um, Let me make it a little bigger. Do you still remember the worksheet, guys, that I taught you last time? And for those who have background in accounting, who are new in my class, do you still remember the worksheet that we guys are doing? What can you see in the worksheet? Okay, can you guys speak? What do you see in the worksheet? I'm showing you a worksheet, by the way. Can you describe it? What do you see here? Hmm. What do you see in the worksheet? Oh,
Balance adjusting income statement.
okay, so you can see it very nice. You can see it very clear here. So in the worksheet, guys, there's a column for your trial balance, which is this. We know how to make a trial balance, right? Okay, last accounting, you guys did not do this column, the adjustments. Okay, we did not make any adjustments, but we did the income statement and the balance sheet. All right, guys, the number that you will put in the income statement is what? Can you tell me? What shall we put in the income statement? Do we have to put cash, accounts receivable, supplies in the income statement? What shall
Revenue
we
and
put?
expenses.
Revenue and expenses. Very
Expense.
good. So what's the name of the revenue here, if I ask you? The revenue's name? Let's make
Sales.
it even. Sales. Okay. So the name of the revenue here is sales. And then the expenses, what do we have? We have what? From salaries
Expenses.
going to office, right? So
Yes.
these are the expenses. So those are the numbers that we copy, right? And we put in the income statement. What about in the balance sheet? What shall we
Assets.
put there? Assets, what else?
Liabilities.
Liability. And
And
owner. And owner.
owner's equity, correct? So from cash, guys, from cash going down to actually to drawings. After drawings, that will be part of your balance sheet. Okay, look at that. I highlighted it from cash going to drawings. Let's put a color, okay? So this one should be part of your balance sheet. While sales and up to other expenses, this will be part of your income statement, right? Okay. But this is the thing, guys. This is the thing. Before we do the income statement and balance sheet, we need to make some adjustments because, as I said, guys, what's the purpose of adjustment? We need to update the correct amount, all right, for the period that I want you to prepare. For example, I want you to make a monthly income statement. Did we consume some of the supplies? Have we used some of our prepaid rent? So in that case, we need to update so that we can know the adjusted or the correct amount that we will put in the income statement and balance sheet. So let's have an example. Okay. All right. So here is the trial balance of Latin Disco. Let me just see. Okay. Can you guys read? Oops. You guys can see, right? Okay. The trial balance for Latin Beat Disco follows. Prepare an 8-column worksheet for the year ended December 31, 20-something using the following additional information. Okay, guys, look at this. Look at this. The two bulleted sentences here, guys, are subject to adjustment. We need to adjust this. Okay, so what's this? Supplies on hand on December 31 are valued at $200. Okay, and the second one, the declining balance method of depreciation is used and equipment depreciates at the rate of 20% per year. So two things we need to make right on December 31. Although you see, guys, you see the December 31 here, it's like it's the end of the year, right? But the number here related to supplies is not correct. So how much is the supplies here? It says 700, right? Do you see? Is it 700? Right? Let me know if you can see
Yes.
this.
Yes.
Okay. So this number is wrong because according to the adjustment, the supplies on hand or the remaining guys are valued at 200 only. So what do you mean by that? It says at the beginning it has 700. It's wrong, right, guys? The 700 is wrong because although it's December 31 here, right? The reason why it's wrong is because they gave us like this thing at the end of the year, right? So what happened to the supplies? Why did it become 200 only? We purchased 700, but at the end of the year, on hand meaning what is left is 200. What happened?
Maybe return.
Did we return something, guys?
Consume 500.
Okay, so the word instead of return is we consume the 500 of it. Did you understand that? What's the purpose of buying supplies? Of course, because we want to use it, right? So look at this. How do you know the remaining amount of supply? Normally, we count. After counting, oh, Mr. Gabriel, when I count the remaining supplies, what we have is only 200. So the conclusion there is because we have used the 500 amount of supplies. How did we get that? The 700 thing, $700 here, take away 200. Of course, the amount that we used is $500. This is how we put it in the adjustment. Okay, everybody, try to take a look this one. Okay, so where is that supplies thing that I am talking about? Have you seen this one, 700, guys? Okay, all right. How much shall we put, guys, in the balance sheet if I ask you? How much supplies are we putting? Is it 700 or 200 in the balance sheet?
200.
200. So we will record the actual. Okay? All right. But of course, before we write 200 here, we need to make an adjusting entry. How do we make it right? Okay, so let's probably make it like smaller. Let's make it 100. Okay, I'll put it probably here by the side. Okay, so on December 31, we should write a journal adjusting entries. Okay, it's called adjusting entry, which is also a journal entry. We normally do it at the end of the year to make the amount correct. Journal entry. Okay. Okay, same. Okay, so what must be debited on December 31? What should increase? What should decrease? Ah, okay, what do you think? What will be debit? What will be credit? Can you tell me? On December 31, what's going to happen to your supply? Tell me. What is debit? What is credit? You said that supplies decrease, right? By how much? Hmm? How much is the decrease in supply?
500.
500. Okay, so I'll put it here. Supplies decreased by 500 supplies. Therefore, I put it in the credit, right? Okay. Wait. There is debit here, and then there is. Why is it too big? Okay, and there is credit here, right? So, okay, the supplies you said decreased by 500. So, meaning when I make the T account here, guys, look at this. All right. It's very quick. Let's just put this one up. And then let's put it, I'm just like showing to you, okay? This one on the, okay, so this one should be, wait, merge and then center. Okay, so this one should be the amount of supplies, right? Okay. At the beginning, we have 700. That's the one in the trial balance, right? 700. And then at the end, After counting it, guys, you said that the remaining supplies is only 200, right? That's the supplies on hand. This is the actual December 31. This one is the supplies that we have normally at the beginning of the year. So what happened? Why did it become 200? You said it decreased by 500, correct? So I'll put 500 over here. Correct? That's the adjustment. Do you understand?
Yes.
Okay, so the total supplies at the end of the year is $200. Okay, what's the debit if I ask you? We know that supplies is credited, this one, right? Because it decreased by 500. That's why we put it on the credit. What should be debit? Ah,
Can cash,
what is that?
cash account.
We cannot put cash.
Play expense.
Supplies expense. Okay, so supplies expense will be your debit. Remember, guys, we've used the supplies. The amount is 500. And of course, when we do your income statement, this expense should be part of that. Again, if we will not include the expense, guys, in our recording at the end of the year, what's going to happen to your net income? Let's say we did not count this one, the 500 expense. What's going to happen?
It's gonna be high.
It's going to be high. All right. And that's wrong. That's why the purpose of adjusting entries is to correct the amount in the worksheet. Do you understand that? So I'll be making another T account here for the expense. Okay, let me just copy this. Okay. And then I'll just take out some stuff. Okay. Okay. This one is supplies expense, right? This is the correct. This one is not there. Okay. This one is not there. This one is not there. But at the end of the year, guys, at the end of the year, December 31, there is like an expense amounting to 500 there, which is debit. It's like it gives birth to an expense at the end of the year. You understand that? One is the decrease in supply here, and the other one is an increase in expense at the end of the year. Do you understand that? You guys okay? Okay, now let's see the income statement. So you said that there is an expense of 500. Nat, are you on the class? Participate, okay? You join me. Okay. And then the supplies will decrease. Okay, let's try to record that. Okay, supplies expense. All right, so here, do we have a supplies expense here, guys, on the list of expenses? Can you take a look here at the bottom? Is there any list of supplies expense? Is there any? Check. Look.
No.
No. So therefore, if it's not there, guys, after the total in the trial balance, you see that there is 142 here, okay? We will add that one because if we will not record the supplies expense, you said that the net income will be too much, right? So we put the word supplies expense there. How much is the supplies expense, as you said? How much have we used?
500.
500.
Okay, so 500. So we will put that in here in the adjustments in the debit, okay? Debit because expense is always debit. 500. And then we will also copy that where? Income statement or balance sheet? Where shall we put the,
Income statement.
of course, expenses is part of the income, debit also. Debit here, debit there. Okay, so let's probably, okay, I'm gonna probably put a color here. Okay, let's assign a color for the first adjustment. Let's, oh, oh. Okay, so let's say, let's make it yellow. Okay, that's the first one. Okay, now, what about, okay, where is it? Okay, here. Supplies expense, debit, 500, and then supplies credit, because we will show that supplies decreased by 500. So where shall we put that in the adjustment? Do we have the word supplies here in the list of assets? Do we have the word supplies here? See,
Yes.
okay,
Yes.
it's here after accounts receivable, right? Okay, now It's 700 here. So adjustment. Okay, where shall we put the 500? Debit or credit? In the adjustment. Debit or credit?
Credit.
Credit, because we want to make it right. And we know when asset is on the credit, it decrease, right? So there is a decrease of 500 here. So how much would be the new amount of supplies at the end of the year? It will be
200.
200. Where? Balance sheet, income statement.
Balance sheet.
Of course. And that is debit still, because debit is bigger than the credit. You subtract the two. And the 200, guys, is the same as the supplies on hand on December 31. This number, the 200, must be the number that will appear to the balance sheet, or else if we still put 700 there, guys, let's say, sir, can I just still put 700? It will be wrong, guys, because assets will be too much. Remember, you use 500 of that. That's why it is only 200 here. Do you understand that? So when we prepare the balance sheet, it will be a correct balance sheet now. So let me try to make it. All right, let's put a color. Okay, I'll also put probably yellow, because I put yellow in the partner. They are partner. Okay, do you understand that? So yellow, that's the first adjustment. And then the other yellow, that's the partner. Just like this, supplies expense, and then supplies. Did you get that? Okay, next, let's go to the next adjustment. Oh, ask question if there is. Are you guys okay? Yes? No? Yes?
Yes.
Yes.
Okay, very good. Okay. Number 2, look at the second adjustment. The declining balance method of depreciation is used, and the equipment depreciates at the rate of 20% per year. So guys, again, do you still remember the two methods of depreciation? The first one is a straight line, and then the second one is declining balance method. That's part of our lesson last time, right? I'll show you how to calculate. So in here, guys, we need to recognize, because we know that we are using, what's that? Is that an equipment? Equipment, yeah. How much is the equipment here in the trial balance? We have, look at this, 45, right? You see this one? 45?
Yeah, 45.
Yes.
Okay. I have a question to you. Is the equipment new or old?
Old.
New.
Okay. Okay, somebody says new. Who says old?
Me.
Why? Why did you say old?
Because we use it after that. We use this money.
Remember, we bought the equipment, right? How it could be brand new, it could be an old, but actually the answer here is old. It's not new anymore. Why? What do you see in the trial balance? Anyone? How did you know that the equipment is already old?
Depreciation
Because
equipment.
depreciation is the accumulated depreciation.
Here, very good. So, correct. Do you see the word accumulated depreciation equipment here? Do you see this one? There is already a decrease of 15,400 in the value of the equipment. Do you understand that? 15,400. This is the total decrease in the value. So remember, they are always partner. Put this in your mind, guys. Equipment and accumulated depreciation of equipment, they are, let's say, husband and wife. Okay, they are married to each other. They cannot be separated. So if I ask you guys, how much would be the book value or the value of the equipment after taking away the depreciation? If I ask you, how much would it be? So you, what do? You subtract the 45,000 by 15,400, and you will know the real value of the equipment. Do you understand? Do you understand that? Yes or no? It's silence. Silence means yes.
How do you get the
True,
15400?
The 15,400 is given, so we don't need to calculate for that. Okay? So because they gave it to you, this is our problem. We will calculate the new decrease. Okay? All right. So if, let's say for instance, in the problem, you saw that there is a given accumulated depreciation, guys, just leave it like that because they gave it to us already. Okay? So our problem now is the second bullet. Look at this one. We need to calculate because it decreased already probably in last year. This is the total decrease. Our focus now is how much would be the decrease this year from January to December 31. That is our focus. So I'll teach you how to calculate for that. All right. Because we need to record an expense, right? It's getting older again for another year this year. So we have to calculate. I hope that you guys can connect. All right. Okay. Let's do it here. Okay. To make the number correct, we will make an adjusting entry. December 31 also. All the adjustments are done, guys, at the end of the accounting period. Okay. Tell me. Um, what are the adjusting entries that we guys have to do? Probably calculation first. Okay, so how do we calculate for the depreciation? Calculate. All right, for this year. Last year, don't worry about the what's this. Don't worry about the 15,400 because they gave it to us already. Okay, our problem is this year. So how do we calculate this year's depreciation? Okay, depreciation equals. What shall we do?
Point two
Assets.
times
0.2 times
45,000.
45,000. Okay. So what about the others? Thank you.
Yeah, the 40,000 into 20% of the 45,000 is a
Yeah.
depreciation for the 1 year.
For this year. Is that
This
what
year,
you're saying?
yeah.
Okay. Any other answer? What about the decrease in the past year? Are you not touching that? Because you're telling me that, sir, just multiply 45,000 by 20% to get the this year's depreciation or decrease. You don't mind about the 15,400? You just ignore this one? Remember, we are using the second method, guys. Declining balance method. Go back to your lesson. Remember, I taught you this lesson. I don't know if you remember. Okay, so let me tell you. If you're using the second method of depreciation, how do you call that? It's called declining balance method, guys. Okay, declining balance method. In here, guys, before we multiply to 20%, okay, we have to
Here, yeah, here is a declining balance method.
Okay. We have to take away first the past decrease. Okay? Do you understand that? Take away, okay, 45,000 minus 15,400, and then the difference multiply by 20%. Because according to your method, guys, if you're going back to that, we use not the brand new cost, but the cost after taking away the depreciation. So in this case, we are going to calculate it this way. Okay, depreciation equals, is it 45,000? 1,000 minus, okay, what is the given? 15,400, right? Minus 15,000, 15,400. And then the undepreciated cost. Okay, I'll enclose it with the bracket, okay? Times 20% or 0.20. 20% is the same. Okay, what's your answer here? What's the answer?
5,920.
520.
920.
Okay, is your answer the same?
Yes.
Okay, so I will, okay, let me try to do Excel here, okay? Equals 45,000 minus 15,400. And the answer is, oh, I don't want it that way. Equals 45,000 Take away 15,400. Okay, 29,600 times 0. Point. Okay, so okay, 1 second, equals this times 0.20. And then the answer is 5,920. Okay, very good. So you guys are right. So this will be, guys, the new decrease this year. Do you understand that? The 5,920 will be the new decrease this year. It decreased in the past already by 15,400, but now there is an additional decrease of 5,920. Okay, so what must be to correct the amount of depreciation in the worksheet? What shall we debit here, guys? What's that? Debit what? What's that? Oh, wait. Probably the accumulated. Accumulated depreciation, guys, will be, okay, how much is our debit, by the way? It's credit, right? Credit 5,920, right? 5,920. Okay, what is your credit? Let's put the word equipment. Okay, what's your debit, by the way? Debit what?
Depreciation account debit.
Depreciation expense, and then we put the equipment. So we will record an expense. Remember, guys, we need to recognize an expense for this year, or else your income statement will not be correct. Okay, so we put a depreciation expense of 5,920. Is this an actual, I mean, an actual decrease in the equipment, or it's just like an estimate? What do you think? Is it just an estimate? Remember, unlike remember, we are paying the hydro expense, right? Hydro expense because we use the electricity. What about the depreciation expense of the equipment?
The acting
Is this actual or an estimate?
yeah, 20% they fixed it, right?
So actual or estimate? The 5,920.
Uh,
Oh. My question is, I am remember, if you use your hydro, right? We need to recognize the name is called hydro expense because we use the electricity, correct? And normally we are paying money to that, okay? But for the depreciation expense, do we pay cash for this, guys? For this expense? Depreciation expense or no? Do we have to release cash for the depreciation
No.
expense? No, the answer is no. So it's like, it's just like an estimate, okay? That we conclude, oh, sir, I believe that the value of the asset decreases after 1 year. So in short, we just need to recognize so that we can present a very fair income statement. So here, let's see. Is the word depreciation expense part of the expenses or not? Take a look here. Depreciation expense, is it here? Yes or no? Look at my trial balance. Is depreciation expense here on the list of expenses?
No.
No, so we will add it at the bottom, okay? Because it's an expense, guys, right? We have to include it here. And then we put the word equipment. It's an estimate. We didn't release cash, but we have to account. We need to recognize the expense. Okay, how much? It's 5,920, right? Okay, debit, credit. Debit, credit. Expense, this is an expense.
Credit.
Credit. Do you agree that depreciation expense is credit? Guys, expenses. How do we treat expenses?
Debit.
Okay, always debit. Okay? Expenses is always debit. 5,920, correct? Okay, so this is the first adjustment. Okay, and this expense will be also recognized as part of your income statement or balance sheet?
Income statement.
Income statement because that's an expense. Okay, 920. Okay, let's assign a color. Let's make it probably um, do you want to make any color would be okay. It doesn't matter. Okay. I just put this one just for us to remember. Do we have red? Red is too colorful. Can you still see the color or not anymore? I mean the number. That's probably this one. What's this? Light
Yes.
yellow one. Okay. What about that? You can see well. Five
Yeah,
nine
that's
twenty.
fine.
This is
Light
better.
light yellow one. Okay. So what about, okay, this is the first part, depreciation expense. Okay, the reason why we record the depreciation expense is because we want to calculate a fair income statement at the end of December 31. Okay, what about accumulated depreciation? This part, the partner, is it part of here? Can you take a look, guys? Is the word accumulated depreciation on the list here? Is it here on the list? Do you see it? Do you see it?
Yes. Yes.
Okay, so here, guys, here is your accumulated depreciation. It's here. There is a decrease already in the past year of 15,400. And this year, how much is the total decrease? We just calculated it. What's that? 5,940? 5,920, right?
5920.
5,920 credit, right? So we will put, okay, where shall we put the word, the 5,920? Debit, credit.
Income
Wait.
debit.
Adjustment first. Adjustment. Debit, credit.
Credit.
Credit. Okay, we put 5,920 over here. Okay, so if I ask you guys, last year the total decrease is 15,400. Okay, of the equipment, they are partner always. Okay, and this year there is another decrease of 5,920. How much is the total decrease now of the equipment? 15,400 last year. That's the total. And this year there is an extra decrease of 5,920. How much is the total decrease as of December 31 this year?
21,320.
How did you do that?
Added.
Add it. Okay, so the decrease last year, add another decrease this year. How much did you say? 21,320.
21,320.
Where shall we put it? Income statement or balance sheet?
Balance sheet.
It must be in the balance sheet because always, guys, that's the partner of your equipment, right? Let me just calculate if Ratish Warren is saying as the correct number. Okay, this one, subtract to this one, and the answer is, oh, sorry, add, not subtract. Okay, sorry about that. Equals this, because that's another decrease, okay? When the accumulated depreciation decrease, becomes high, the value of the equipment becomes lower, right? Okay, so okay, what about the equipment 45,000? Where shall we put it? Income statement or balance sheet?
Balance sheet.
Balance sheet, because that's an asset, right? So 45,000. So in short, guys, if I ask you, the 45,000 here is your equipment, okay? This amount is the brand new amount, but when we take away the depreciation, guys, here, how much is the value? They call it book value of the equipment after at the end of the year, if I ask you. So 45, take away the total accumulated depreciation. How much is the value, the real value of the equipment now? Can you do that? Okay, let's just subtract 45,000 minus. Okay, the real value of the equipment now is 23,680. Do you understand that? And this is the correct presentation, because if we will not like decrease it by another 5,920, the equipment is not getting older, right? It's getting older, so we need to recognize another 5,920 decrease. Instead of 15,400 decrease only, we will add another decrease. So the total decrease is 21,320. And when we calculate 45 minus 21,320, the difference is the real value of the equipment after this year. Do you understand? Tell me if there is a question or a violent reaction. Don't react violently, okay? Okay. Let's put that color. What color are we putting? What's that? Accumulated, right? The partner is okay. Let's put what's that? Light yellow one, right? Oops, this one. Light yellow. I think this one. Is this the color? Or this one? Out here. Okay. Light yellow. Okay, someone is chatting me or what's that? So I have to go. I try to watch the rest of the lesson. Why, Justin? Why? Is it like an emergency reason? So I can put it on the note?
Sir, I have to go to get a license sticker
Okay.
for
All right.
the
So I'll
register.
put a note, okay? I'll put a note there. Thank you, Justin.
Thank you very much, sir.
Okay, you take it. All right. So do you see the adjustments now, guys? Have we brought in the value? I mean, uh, look at the position from the income statement and then balance it. Sir, what about the others? Let's say cash. Where shall we put the cash? Okay, remember guys, in making worksheet, so where shall we put all these things from cash going down to drawings? Shall we put cash in the income statement or balance sheet? Let's finish the moving of numbers. Okay, where shall we put the 12,000? Income
Balance sheet.
statement. Okay, so because they are all assets, copy that here, 12,000. Okay, I'm just copying them. Okay, what about the accounts receivable 4,000?
Balance sheet.
Okay, that's also in the balance sheet. Okay, so supplies, we did it already, so we don't need to change that anymore. We corrected the supplies. Instead of putting 700, guys, we only put 200 because we used the 500, okay? For the equipment, just copy. For the accumulated depreciation, it will become like bigger. Instead of putting 15,400, we will add this year's additional decrease. The total depreciation is 21,320, okay? Now, let's go to accounts payable. How much is this? 7,000, right? So we will just copy 7,000 over here. Okay? And then what's the next? What is this 26? This is Acevedo Capital 29.6. We will just copy that on the balance sheet. What did I say? 29.6, right? Isn't it? Okay. And then the last is the drawings amounting to 18,000. Okay. So 18,000 debit, which is your drawing. Okay. Are you guys okay? So far, so good?
Yeah.
Okay. Is adjusting entry becoming kind of like clearer now? What do you think? Does it help when I showed you the worksheet? What's the purpose why we adjust the entry? Why do we debit this one? Why do we credit? Is it clear now for you guys? Let me know.
Yes, for me, I think it's better right now
It's
because
better, right?
yes, adjustment is affect to the balance sheet.
Correct. That's the thing. Yeah. So Anas, let's see again. Let's see again. Look. What's this? The supplies here is 700, right? Do you see this one?
Yeah,
If let's say for instance, if we will not let's say update it, right? Let's say in the supplies, sorry, the supplies. Let's say we put 700 here instead of 200. Look. I'm going to erase. Let's say I put 200, 700 still here. What do you think? Is that right? Unless I put 700 here still, like
no,
the beginning balance?
no, it's not right.
Why? What will
Because
happen to your total assets? It will be over or under?
over.
It will be overstated. And see, that's the purpose we take away the 500 because we need to update the correct number in the balance sheet. That's why it's only 200. Okay? Same thing is true with your depreciation. Okay? Look at this. The total decrease last year, probably it's been decreasing more and more and more. Okay, how many years ago? So the total decrease is 15.4, and if we will not recognize another decrease of 5,920, guys, your equipment. If I put look at this, if I put 15,400 here, can you mute yourself for a second, please? Mute and then unmute if you want to speak. Someone's microphone is on. Thank you. So look at this. If I still put, look at this one. At the beginning, it's 15.4. I put 15.4 again after 1 year. What do you mean by that if I do it? Is that correct, guys? If I put the same number, 15.4 and then 15.4 here? And the answer is no. Because if you put the same total decrease here after 1 year, the meaning of that is your equipment is not getting older. Remember, it gets older for 1 more year. So therefore, this one should be, what's our number here before? Let me undo. It's 21,300. Why? Last year of 15,400 decrease plus another decrease this year. So the total decrease is now 21,320. Does it help, guys, to understand adjusting entry? Does it help you to understand it?
Yes, so
Okay, so yes. So we transferred all, what's this? These are all the balance sheet item. Okay, now let's go and complete the income statement. So how do we calculate the income the net income again, guys? How do we calculate the net income? By subtracting what? How do you
Revenue,
do it?
revenue, subtract
Minus.
expense.
Very good, very good. Okay, so let's transfer the amount from sales, guys. Look at this. From sales going down to wait, sales is the revenue, right? Yeah. And then from 42 going down to 3,000, these are your expenses. Can I just like quickly copy so it will be easy? Okay. I'll select, copy. Where shall I put this? Under balance sheet or income statement?
Income statement.
Very good. So just press here, guys. Press here. Make sure that it's aligned, okay? Right click and then paste. All right. So see what happened, guys? I copied 90,000. I put it here in the income statement because we need to calculate for the net income after all the adjustments. So 42,000 up to 3,000, it moved here. Now I'll take this single line. Look, there is a single line under 3,000. We don't need to put that yet because there's an extra expense at the bottom. Okay, do you see the extra expense? Okay, look at the extra expenses. Remember, we have supplies expense of 500. That's this year. And then there is a decrease in the, what's this, depreciation expense of 5,920. We need to include that in the list of expenses. Do you understand? Yes? No?
Yes.
Okay, what if we did not include the 500 here at the bottom, guys? Sir, can we not include 500 and the 5,920? What's gonna happen to your net income if we will not include the new expense this year? What's gonna happen to your net income? Will it be overstated or understated? Ah, let's say we remove this, the 500 and then the 5,920. We did not recognize, for example. What's gonna happen?
Overstated.
It will be over, right? Okay, so let's calculate now the income. Okay, so 90,000 revenue, just bring it down here. It's 90,000, okay? Now, let's add all the expenses. 42,000, add all the way down to not only 3,000, but include the new expenses out of 5,920. What's the sum? Okay, can you guys try? So I want you guys to work. Okay, how much is the sum? Add them all from 42 going down to 5,920. What's the sum of all the expenses? You can use your calculator actually.
68,720 is all together.
Okay, 68.
720.
Okay, I'll put it here. Okay, 68,720. Okay, I'll try to double check. I'll put it here in the proper place. Okay, equals sum. Okay, let me highlight from here to here. Close bracket. Okay, very good. Thank you, Radishwaran. Okay, you can close your mic now. Okay, thank you. Okay, so let's go and focus ourselves. Yes.
Or 5.
What about that? Okay. Okay. So we have a revenue amounting to 90,000 and an expense of 68,720. If I ask you guys to calculate the net income, what will we do? How will we calculate the net income? It was always mentioned by somebody. We subtract what? We subtract
68
Yeah.
minus 19.
68 minus 90 or 90 minus 68. Okay. 90,000 revenue minus 68,720. Do you understand that? So what's the answer? Subtract the two. 90 minus 68,720. 90.
21, 280.
21 to 80. 21 to 80. Okay, let's see.
No, 21, 280. Yes.
Okay, correct. Okay, same. 90,000 minus 68,720, right? I'm just double checking. Okay, very good. You're right. Okay. So the 21,280 is your net income. So it's still good for the business, even if there are an extra, look, extra two expenses here at the bottom. We still manage to have a positive income. It's not a loss. Okay. So in the worksheet, guys, when you present, let me show you. Okay. This is how we present the net income. Okay. I put the word net income here. Okay. Okay. I normally put down the bigger number. Okay, so which is bigger, 68,720 or 90,000? So we bring down 90,000 here. Leave a space, guys. Leave a space. Okay, leave a space, and then put the bigger number here. After that, put it also here. Okay, put on the bring it down, and then put it also on the left. And then the filling in. Look at this one, guys. I put a question mark. This number, guys, should fill out should be filled out using the net income. Do you understand that? I'll put 21 to 80 there. 21 to 80. The purpose of this is just for to present in the worksheet. Okay. Again, always put the bigger number at the bottom. Copy it on the other side, and the filling in, guys, should be your net income. Okay. All right, now balance sheet. Let's go to the balance sheet. Add all the debits from 12,000 going down to 18,000. What's the sum? Can we add them? 12 plus 4 plus 2 plus 45 plus 80. Actually, I can do it. Okay, so I'll show you. Equals sum. Let's add all the debits. Okay, just like what we did in the income statement. Okay, tell me if you guys got the same answer. All right, 79,200 here. Tell me, okay, while you are calculating. I'll also calculate the right side, the credit, from 21 plus 7 plus 29. Sum, I'll add them, okay? Add the debit, add the credit. The answer is 57,920. That's your credit. Now, what's the bigger number here, guys? What's the bigger number? Is it 79 or 57?
79.
Okay, then bring that down. 79,200. Put it also on the other side. 79,200. You understand that? Okay, this number, guys, because this is the smaller number, right? What must be this number? This one. What's this? 57,920. Add something, you got 59,200. What's this? What should be this?
21 to 80.
Oh, correct. So what's this number? What is this number that we are using? Is that we take it from another, like, what did you say? 21 to 80? 21 to 80?
Yes.
So that's the same as the net income, right? Here. Okay. Actually, that must be right. Okay. 21 to 80. That must be the correct number. 21 to 80. The filling in is also the net income. But let's check. Guys, this number, as I said, this number should be equal to the net income. If that's not equal to the net income, your calculation is wrong. Okay? Can we add 57,920, add 21 to 80? Is it really 79 to 100? Let's see. This plus this is 79,000. That's the same. Okay, so correct. Do you understand that? This, guys, the filling in number in the balance sheet must be the same as the filling in the income statement. If they are different, the answer is wrong. Okay, so, okay, your feedback. What's your question? Is there any question? Any question? Are you guys okay? Let me know. Are you okay? Give me a feedback, guys. This class is
Yes,
very
sir.
silent. Okay. I am comparing you guys to my. I mean, don't misinterpret me, okay? I had some accounting classes also in the past, okay, and you know, probably it's because some of them have accounting backgrounds. That's why the discussion is very, it's very alive. Students are very, there's a lot of questions, there's a lot of clarification that they raise. They are not just like saying yes, yes, yes. But I am not saying that, but this class is also very good. Okay, this class is also very good. That's what I'm saying. So okay, if I ask you guys, if I ask you this question, okay, so this is just a worksheet, okay? Worksheet, guys, by the way, is, look at the heading, Latin Beat Disco, all right? Worksheet, and then December 31. Let me tell you, when we say worksheet, okay, worksheet is just like a scrap paper. You know the word is scrap paper, all right? We don't use this in reporting. So let's say, for instance, the boss told you, Aurora, I want you to prepare a report to me. I want to see the income statement and the balance sheet. Okay, so let's say that's the question. Somebody's messaging me, or someone is raising their hand. What's that? I don't know.
It's just by mistake.
Okay, all right. So this is it. Let's say, Aurora, Shukriya, I want you guys to make a report today. I want to see the income statement of the business and the balance sheet of the business. Okay.
Okay.
Do not show the boss the worksheet. Okay? Do you understand? This diagram, don't show this one, because this is just like a scrap paper. It's like a rough draft, right? In English. When we say scrap paper, this is just like an informal paper that you need to keep somewhere, but you have to show the boss what he is asking. He wants an income statement and the balance sheet. Although income statement is here, right? You see the income statement here in the column, and you also see the balance sheet here. The boss does not need that. The boss needs this one. Okay, look at the bottom. There is like two tabs at the bottom here, guys. Do you see the bottom tab? It
Yes.
says income. Okay, I'll click on that. All right. Here is what the boss wants to see. Do you understand? We will copy, we will make a formal income statement based on the scrap paper that we made. So you put the word Latin beat disco. It's called an income statement. And then, of course, for the year ended December 31, 20 something, you write down your revenue heading. Sales is 90,000 because there is no other sources of revenue. You just bring that down in the second column, right? And then afterwards, you list down all the expenses. I arranged it in alphabetical order, guys, from depreciation going down to telephone. Where did I get this number? From the worksheet. Let's see. All these things, guys. I took this number, but I made it in alphabetical order so that it, look, first in the order is the depreciation expense, right? Because it's letter D. Okay? And the rest, I just copied. Then, of course, total expenses. When we add all these things, the total expense is 68,720, which is the same as this, right? 68,720. And then when we try to calculate the income, 90 minus 68,720 is 21,280, which is the same as here, 21,280. Do you understand that?
Yes, it makes sense.
Okay, so
Thank you.
no problem. So in short, we are making a formal, this is the formal statement. Income statement is formal. So you need to do this one, and this is the one that you need to show to your boss.
Okay.
Okay, what about the balance sheet, sir? Okay, we did it already in the worksheet, right? See, we did an adjustment. The supplies become 200. Okay, this is what the boss wants to see. From the worksheet, guys, you need to move. Look at the tab at the bottom. Do you see this one? The balance sheet tab?
Yes.
Okay, this is your new balance sheet now. It's a little longer, but actually it's still fine. Okay, look. Latin Beat Disco, balance sheet, December 31, 20 something. Remember the list of assets. You have your current assets, meaning assets that can be converted into cash within 1 year, right? So what are they? Cash, accounts receivable, supplies. Put them, pretend that there are the three columns, okay? $3 column, one, two, three. Put it in the middle. Remember B, C, D, right? That's your column. Put the first amount in the second column, all right? And
Mm-hmm.
then put like an underline because we will add them all. So 12 plus 4 plus 200 is the total current assets is 16,200. So guys, by the way, when we say current assets, look, 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 I put a definition here. Current assets, these are assets that can be converted into cash within 1 year. Example, cash, accounts receivable, prepaid expenses, and supplies. Can we convert cash into cash within 1 year? Cash to cash. How can you convert cash to cash? Can you explain that again? How can we convert cash to cash? Is that possible? Git, are you on break or not? I don't hear your teacher. Can you make it louder, please? Okay, then do the work. Are you doing the work now? Sometime, just a second. Let me just check what she's doing. Okay, I'm going to check. Right, so don't go somewhere else. Huh? See, I know you're doing something else. I just got out of the cell. So why? You thought, yeah, because I thought you still. No, this Zoom is still here. I just told them. Okay, okay, so do the work now. All right. So, yeah, do the work. It's just a little slow. That's okay. But don't do something else, okay? Do the work now. Do you want breakfast? Mommy? Han, kailangan yata namin ng breakfast. Okay, is there an answer now? All right. Normally, it's like other currencies. That's what I'm saying. Can we convert euro to Canadian dollar quickly? And the answer is yes, right?
Okay.
Can we convert American dollar to Canadian dollar quickly? And the answer is yes, as quick as we can. Let's go to the, those money exchange center. Just go there and then you can convert it easily. What about accounts receivable? Remember, accounts receivable, it is collectible within how many months, guys? Accounts receivable. Uh, this is the customer will pay you within normally 30 days. I hope you still remember that. 30 days. Prepaid expenses, normally advance payment of rent for 1 year. Okay. And then supplies, normally if we are closing the business, guys, we can sell supplies quickly. But for the fixed assets are the property, plant, and equipment or long-term assets. That's another name for that. What are these? They are not intended for sale. We buy them because we use them for business operation. Example, land, building, equipment, and truck. Those, remember the age principle, guys, that I taught you in the past? Those are the fixed assets. Okay, so let's see the fixed asset list here in your, okay, there is a scroll here, guys, at the bottom. Just move it on the left. Okay, so we are done with the current assets. Now the other fixed assets, we have equipment here, guys, 45,000. And look, less. As I said, you treat them as husband and wife. uh the word actually is called, what's this, accumulated depreciation is called contra asset. When we say contra asset, guys, the meaning of that is we subtract it from. Okay, look at what we did to the accumulated depreciation, guys. We subtract it from the equipment. Do you see that? So equipment and accumulated depreciation, they must always be together. All right? So when I write down the word equipment, I put it in the middle. And then less accumulated depreciation, put it here, close to that. When we subtract the 245 minus 21,320, the difference is 23,680. That's your total fixed assets. Okay? Now, if I ask you, sir, how can we get the total assets? Of course, the total assets is equal to total current, add the total fixed, you got your total assets of 39,880. Is that clear?
Yes.
Okay, now let's go to your liabilities and owner's equity. So under liabilities and owner's equity, of course, ignore this table. Okay, ignore this table for now. So here, we have also the current liabilities and long-term liabilities. So let's define those two. How can we say that a liability is current or long-term? Let's go here. Here, when we say current liabilities, these are liabilities or debts payable within 1 year. For example, accounts payable. Remember, accounts payable, guys, is payable within how many months? Accounts payable is payable within how many? It's like accounts receivable, payable
30
within
days.
30 days. Okay. Sometimes the 1 year bank loan. Bank loan could be a long-term liability if it's more than 1 year. Okay. But let's say we borrowed money from the bank. We intended to pay it like for 1 year. That's part of your current liabilities. Okay. And of course, notes payable. It's like an accounts payable, but notes payable is uh, you pay it not within 30 days. Sometimes you paid it within 3 months, within 4 months. It's like when you borrow something, something like that. Okay? All right. So long-term liabilities, these are payable beyond 1 year. Example, mortgage, we know. If it's more than 1 year, how long are you guys gonna pay the mortgage normally? How long? It depends if you won in the lottery or if you have many cash, right? Okay. Mortgage normally is 20 years, 25 years to pay. That's why it's called long term. Uh, Bank loan could be long term if it's beyond 1 year. So if it's 2 years to 5 years and so on and so forth, that's called long term. Okay. So let's see. Oops, one second. Let's go to the liabilities. All right. So current liabilities, what do we have here? Accounts payable. So we put the amount here, 7,000. Because there is only one current liability, we put the total current liabilities here, put it on the very right. Okay? All totals. And then let's go to long-term liabilities. I think do we have long-term liabilities in the worksheet? Wait, let's see. Do we have a long-term liabilities? What are the liabilities here? Only one? Oh, accounts payable only. Okay, so in short, there is no long-term liability. There is no bank loan. There is no mortgage. So just leave it blank like this. I put long-term liabilities, so nothing. All right. So the total long-term liabilities is nothing as well. It's just zero. Look at this one. So if I calculate the total liabilities, that's 7,000 total current plus zero is 7,000. Okay. And then afterwards, let's go to the owner's equity. Guys, this is the thing. In owner's equity, just like what we did before, okay? You start from S Acevedo capital beginning. You put that number in the middle, okay? Um, this number, 29,600, is the same capital at the beginning here. Or, sorry, let's just get it here. 29,600. That's the same capital at the beginning, okay? All right, afterwards, we need to add net income of 21,280. Look at this. These two guys should be partner. Okay, income and drawings. We need to subtract the two so that we can know if there is like an increase or decrease in capital. All right. We know that net income can make our beginning capital bigger, but drawings. What are drawings again, guys? Drawings. Drawings are. What are those? They are.
Expense.
It's like an expense, but what's the other word for that?
When you withdraw money.
When you withdraw money. Okay, so it's like your withdrawal. So it's like an expense that it can decrease your capital. So in short, we need to subtract the two together. Okay, 21,280 minus 18,000, and then the difference is 3,280. We can say that this one is an increase in capital because the income is bigger than the withdrawal. Do you see that one? Okay, 21,280. Income is bigger than the withdrawal. So therefore, we still have something to add to our beginning capital. So 29,600 the beginning, add the increase of 3,280. The capital at the end of the year is 32,880. You see this one? 32,880. And to present it, remember balance sheet, the left and right should be equal, meaning the total assets should be equal to the total liabilities and owner's equity. Let's add the two. Total liabilities is 7,000 here. Add 32,000 here. And then the sum is 39,880. Let's see the assets on the above. Are they the same? Oh, yeah, correct. Total assets is 39,880. The liabilities and equity is 39,880. These two are the things that the boss want you to see. Do you understand that? Let's make it smaller. 100. So what is your question then? Do you have any question about the balance sheet or the income statement? Do you think you can make one if I ask you to do it?
Probably.
Okay, so at least it's positive. Probably is normally positive. Okay, so what about the others? Let's ask the gentleman. Okay, gentlemen, what about you? Do you think you can do like a worksheet, an income statement, and a balance sheet separately? What do you think? Men, where are the men? Hey, men, where? last squad, there is no men, all women. Okay, what do you think? Men, do you think you can do it?
Yeah, I will try.
Okay. It's also positive. Very good, Anas. Thank you. All right. You will try.
Sir,
So,
I just have a quick question,
okay,
please.
good. Go ahead, go ahead.
Okay. So how would you describe a balance sheet, maybe in like two, 3 words? So let's say the worksheet, you mentioned that it's like a
Mm,
draft, right?
yeah.
The income statement is very straightforward. So
Mhm.
how would you describe a balance sheet in just like in 2 words?
Two or probably three. So, balance sheet
Yeah. Mm-hmm.
normally shows your total assets, liabilities, and equity.
Right. Okay. Makes sense.
I think that's the simplest thing. Don't
Yeah.
mix up. Don't mix up because people are sometimes when they make an income statement, they are putting cash in the income statement. No,
Mm.
don't put cash in the income statement. Okay? No, it must be revenue and expenses only for
Oh,
your income statement. Okay? And
okay.
then for balance sheet, of course, there you put your cash. Remember, assets, liabilities, and equity. All right.
Okay. That makes sense.
All
Thank you
right.
very much.
No problem. No problem. And our translation again, guys. If your equity is good, what is the equation again? A equals L plus OE, right? So if your asset, let's see the assets. How much is the assets? It's 39,880. Okay, let me just put it here. 39,880 equals how much is the liability? It's only 7,000, right? Okay, 7,000. Oops, 7,000 plus the OE is 32,880. Okay, 32,880. So, question again about the financial position. Remember, we are talking about financial position last time. If it's good or bad. So, is this I mean, guys, the OE is 32,880, right? This is the determine you need to determine if the business is doing good or bad. So having 32,880 OE, is this a good kind of financial position or a bad one? Ah, remember that's our lesson last time in the past. ah, Having an OE of 32,880, is that a good financial position or a bad? Do you think you can still pay your liability? For example, we plan to close the business. Let's say after the calculation, right? Mr. Gabrido, we decided to close the business, and the reason is because we will go abroad or to the other country, and we will not go back again to this country. So, do you think we can pay our debts by having this equation? I mean, what do you think? So, we sold all our assets. The total cost of the assets is 39,880, right? Here, let me make it bigger. Okay, let's see. Let's go at the bottom. Okay, guys. So, we sold all the assets, and the total cash that we get is 39,880. How much are we returning to the bank or to the creditor? Ah, how much shall we pay them?
7,000.
7,000. Very good. Okay. How much is our share in the asset? This is for the creditor, for the bank, right? What about us? How much is left for us?
32,880.
This one, right?
Mhm.
So in this case, we still have cash, right? Remaining. But of course, it shows here that our finance, guys, the financial position is determined by our OE. Okay. We are still okay because why? After selling all the assets, we can still pay our creditor the amount of 7,000. And after paying the creditor, we still have something like here.
Right.
Okay.
So
Uh,
that's positive.
that's positive and that's a good sign. Not COVID positive, okay? Sometimes people are scared when they hear the word positive, okay? Uh, anyways, uh, I think it's how much is the OE of, I think we calculated last time. I mean, you search about, you know, is it Elon Musk or Jeff Bezos? Who is the richest man in the world right now, if I ask you? Can you search about that? Sometimes it changes. Last time it's Elon Musk of Tesla. Afterwards, it became like, uh, who's the richest man? Can you search about that?
It's Jeff Bezos.
How much? How much is the net worth? The net worth is the OE. How much? Do you see there?
188.5 billion.
188. What's that? What's that? Say it again. Okay. A equals L plus OE. How much is the OE? You said it's 188.5
188.5
B
billions. Yeah.
billion. That's
Yeah.
crazy. Guys, here, this is already the OE, huh? Look at that. That's the OE. Meaning you took away the liability already. And then what is left to this man is still $188.5 billion. If he closes his business, this is what he's getting. That's the so we can say that this man is really, really rich. Okay, no liability anymore, guys. This is it's like after paying the liability, this is what remains. Okay, why not having a short break and then I'll be giving you your practice exercise just for me to see whether you guys can do your worksheet, income statement, and balance sheet. All right. And then this is just an easy lesson, guys. After this, I'll give you a difficult worksheet, okay? Not two
Uh-oh.
adjustments, but many adjustments. The adjustment that we did last time, unearned revenue, something like that. So, okay, have a short break. Let's have a short 15-minute break. Come back at 47, 10:47, or 10:48 because it's 10:33 now, okay? Okay. Okay, do you guys see the screen now? Yes or a no?
Yes.
Okay, so Ratish Moran was able to put the heading. Look at this, guys. The heading always starts from the name of the company, right? Healthcare consultants. You put the word worksheet, and then is it the same date, December 31? That's what the date given. Correct? December 31. Let's see. Yeah, correct.
Yes.
December 31. Very good. So he copied everything from cash going down to office expense. All right. Um, make sure that nothing is missed. All right. Let's see. Okay, I made it smaller. So let's see if everything is here. Then the sum is he performed an operation here. It's 189,000, which is the same as your. Is it the same as that? Let's see, 189,000. Correct. Yeah, very good. Okay, now let's try to put like a single line so that we can like easily see it. Okay, here, highlight, and then I'll put like this one, and then this one, and this one. Okay, just for us to put the total, and then this one is double line always here and then here. Okay, so that is your very first step. Copy everything in your worksheet. All right, so you guys here on the same page? If you're
Yes.
still, yeah, if you're still in progress, feel free to continue, okay? But if you want to watch me first and then do it later, that's okay, all right? So let's see the adjustments. Okay, this is the thing. Supplies on hand on December 31 are valued at $700. Okay, how much is the supplies at the beginning? We have 2,000 here. Do you see this one?
Mhm.
Okay, but at the end of the year, it became 700 only. So if I ask you how much was used, hmm, originally we have 2,000 supplies, but at the end of the year, it became 700 only. That was
1,300.
1,300. So how did you do that, Anas? 2,000 minus 700, and that's the amount that we use. You said 1,300, right? Okay, so in here, guys, I'll try to make a correcting adjusting entry, December 31. Okay, adjusting entry, as I said, guys, is a correcting entry. Adjusting entry. Okay, so the first one is, okay, what should be first, guys? It's called, what should be debited first? Debit what? Debit
Supplies expense.
Supplies expense. Always, guys, debit the used portion, okay? Supplies expense is the used portion of the supplies. How much is that? You said 1,300, right? Okay, how did you get 1,300? You just subtract the total of 2,000, subtract to 700, and this is the amount that we used. So therefore, supplies will decrease by 1,300 here, 1,300, okay? So one debit and then one credit. I'll put debit. Okay, ask question about the correcting adjusting entry. Is there a question? I'll put a note. Okay, so to record the decrease in supply, to record decrease in supplies, right? So calculation, okay, the total supplies is $2,000. That's at the beginning. Subtract to the remaining, which is 700. The difference is 1,300. That is the used part of the supplies. You understand that? Let me just take away the used, and then it's there already. We guys okay? Yes or no?
Yes.
Okay. So let's try to put these numbers in the worksheet so that the worksheet will be correct. Okay. All right. Do we have supplies expense here in the list of expenses? Do we have supplies expense or no? Look at the expenses here are the things. Is there any or none?
Expenses. Yeah.
Supplies expense, that's the word. Is there any? Is it on the list?
No, no, it's not in the list.
No,
No.
no.
Okay, so after, just below the total, okay, you type in the word supplies expense. Okay? And then you write down what? What's that? 1,300 here, right? Debit. And then, of course, the partner, guys, the partner of that is, let's make it a little smaller. I mean, smaller so you can see. So the partner of 1,300 would be where? It is under supplies. Look, that's what we did, right? We credit the supplies here because it will decrease by that amount, okay? Supplies here, where is it? Okay, credit 1,300, right? So how much is the supplies in the balance sheet now if I ask you? How much here, guys? Here in the balance sheet for the supplies. 2,000 before, it decreased by 1,300. How much is the supply?
700.
700, which is the same as, what's this? Supplies on hand on December 31. Are we guys good? We are okay, right? Yes, say yes, guys, say yes.
Yes, sir.
Okay, very good. So now the 1,300 here at the bottom, guys, it's a supplies expense after putting them in the adjustment, okay? Remember, we moved the 1,300, we subtract it from 2,000. This one, the 1,300 here, will be part of your income statement or balance sheet? Supplies expense, income statement, balance sheet.
Income statement.
Okay, because that's an expense, right? Debit also. So that is your first adjustment. Now, let's go to the second one. The 3-year insurance policy was purchased on January 1st for 2,400. Okay, give me a second. Think about that. What should be debit? What should be credit? Okay, so somebody answered me already earlier, right? So, sir, I think for the first year, we can consume how much of the insurance? Look at that. It says it's a 3 years advance payment of 2,400. So therefore, each year, it should be, can you repeat the
800.
answer? 800 only. How did you get that? 2,400 divided by 3 years. So each year, you use the $800 of the insurance. Okay, so let's record the expense. Okay, so the second adjustment, okay, December 31 as well. What must be our debit? Uh, Always begin with the expense part. So this one is in
Insurance expense.
insurance expense. The amount is how much? You said 800?
800, yes.
Okay. Oop. And credit, what? What's the credit? Not cash, okay? Not cash. What's the partner?
Prepaid insurance.
Prepaid insurance. Very good. That's the thing that will decrease, right? Okay, so we will put here 1, 2, 3, 4, 5. Prepaid insurance. It will decrease by 800. Prepaid insurance is the advance payment that we made earlier, right? The total is how much here? The total prepaid insurance is 24, right? 24. And now let's see the effect of the adjustment, okay? So let me try to make it smaller again, 100. Okay, so from 2,400, you said that it decreased by, what's this? 800, right? Okay, can we start first on the debit? Okay, insurance expense first. Is insurance expense on the list of expenses here at the bottom? Insurance or not? Is it here or not?
It's not there.
It's not there, so let's add it at the bottom, okay? Insurance expense, and that is, how much did I say? It's 800, right? And
Yes.
of course, it will be part of your income statement as well, 800, all right? Okay, the other 800 is the decrease in the prepaid insurance. So credit, right? Prepaid. So prepaid insurance from 24, it will decrease by 800 here. So how much is the new prepaid insurance? From 24, decreased by 800. The new prepaid insurance is how much? Because there are 2 more years, right? So how much will be the remaining prepaid insurance after 1 year? 2,400.
1,600.
Take away 800 and you got 1,600.
1,600.
Very good. So that's the remaining prepaid insurance in our, that we still need to use for 2 more years. Do you understand that? So, yes. So how did you calculate again for this, for the 800? What we did is the original amount of 2,400, which is your prepaid insurance, divided by 3, because it's 3 years in advance. The yearly is 800 per year. That's the amount of insurance that we use per year. Okay? Now, let's go to the next. Almost similar to what we did, the declining balance method of depreciation is used to record the depreciation for office equipment, 20% per year, and automobiles, 30% per year. So 2 assets needs to be calculated. All right? So let's put it here. Okay. The first one is, let's calculate, what's this? What's the first asset called? The first asset is called office equipment. The other one is automobile. Okay. Oops. Okay, depreciation expense. Let's calculate first. Depreciation expense. This one is for office equipment, right? Equipment. And the other one is depreciation expense. Expense. Is it automobile? That's what I said? Auto? Right? Auto, right? Okay. So what's the formula, guys, again, to calculate the depreciation? So look at the office equipment here, guys, 11,000, the beginning number. Oh, there is already a decrease last year of 3,760. So what shall we do to calculate this year's depreciation? Tell me. Formula. What shall we do for the equipment? This year's depreciation, how do we calculate?
We're going to subtract the
Okay.
3,760.
Minus
Mhm.
minus 11,000, or 11,000 minus 3,760. Okay.
Yep.
All right. So after getting the difference, what's next? Let me put it there. Let me put it there. 11,000 minus 3,760. Okay. 11,000 minus, I always forget the numbers. 3,760, is that the number? 3,760. Yeah.
Yeah.
That's crazy. I normally forget. Okay, minus 5760. Okay, can we, okay, after getting the difference, what shall we do? After getting the difference, what shall we do to get the depreciation, the decrease? Multiply by, what's the rate? Office equipment by
20%.
20%. So that's the first way. Zero. Can you calculate for that, please? How much is your depreciation?
1,448.
What's your answer? 1,000.
448.
448. This one.
Yes.
Okay. So check that one if that's right. Okay. So for the next one. Sorry. So let's put first the debit. Okay. Debit here. Wait. Okay. On the 31st, we debit the expense. Always expense, guys. Debit. Depreciation, expense. This one is office equipment. Okay. Off equip. Okay. That's okay now. Then the amount is 1,448. That's what you said. Credit what? Credit. Always partner, guys. Accumulated depreciation office equipment, right? The amount is 1,448. 1,448. Okay. So let's calculate the next one for the automobile. Okay. So what are the numbers here for the automobile? We have, where is the automobile? Yeah, here. 40. Okay, is the automobile brand new or no? Is the automobile brand new or not anymore?
Old.
Oh, very good. How did you know? There is.
There is mentioned the depreciation.
Okay, accumulated depreciation. So how will we get this year's depreciation? By what shall we do? What shall we do? Come on. I know that you know the answer. Probably people are like shy to to express themselves. So that is
42,000 minus 15,760
times
times 30%.
30. Very good. Who is speaking? Is this Megan or?
小
Okay. Oh, thank you so much for just participating. Very good. Is it Juan? Or
yes, yes, yes,
oh,
yes.
Juan. Okay,
Yeah.
very nice,
Okay.
very nice. Okay, so 42,000 minus 15,760. Let's do it. 42. Okay, let's put the form first. 42,000 minus 15,760. Yeah, again the number.
Yes.
15,760. Yeah. All right. Oops. 15,760 and then multiplied by 30%, right? 0.30. Okay, what's your answer there?
7,872.
7872. Okay, can you check that out if that's right? 7872. This is your classmate's answer. 7872. I am just like assuming that the answer is right, okay? I did not calculate. Is it correct? 7872? Okay, try to react if it's not. Okay, so what must be our adjusting entry? On the 31, there is a so-called depreciation expense of automobile, right? And then the answer is, Rotiswaran said 7872, and then credit 1, 2, 3, 4, 5, accumulated, okay? Depreciation automobile. That is 7872. Is that correct? That 7872 is right?
Yes.
Okay, he said yes. Okay, so
Have some maybe something.
okay, so guys, I did not notice that the time is 11:37. That's crazy. Okay, so from here, guys, okay, I'm going to post this answer and I want you to continue, okay? Continue to your income statement. Finish your income statement, please. Wait, enter the two adjustment. Wait, let me make it smaller. Enter these numbers, guys. The depreciation, okay, in your adjustment. Complete the income statement. Complete the balance sheet. Do also the income statement attached here, guys, and also the balance sheet. Just try, okay? So when we see each other again, we will be able to see if you guys are really learning, okay? So is that fine for you?
Sounds good.
Okay, so finish that one, and probably we will take that up again when we see each other. So let me just quickly check the attendance, okay?